All right, what is up, tycoons? What's up, traders? Super excited for today's video. We're going to take a look at the global robotics and our artificial intelligence ETF. This is ticker symbol BOTZ, bots. Now, unless you've been living under a rock, I'm sure that you've heard of chatgpt and the amazing capabilities of artificial intelligence. Now, AI, in my opinion, is going to be the next bubble in the markets. Okay. Now, the bubble is just beginning, guys. ChatGPT has only been out for a few months. And since then, we've seen stocks like ticker symbol AI go up almost 200% from the lows to the highs in January to now at the time of this recording. So what we're going to do is actually cover this artificial intelligence ETF. We're going to dive into it just a little bit and then actually go into some of the charts and take a look at some of the technical analysis so that way you guys can get a key breakdown of the levels that I'm watching, as well as any possible structures or patterns and, really signals that we're looking for when it comes to trading capabilities. So make sure to smash that like button, subscribe to the channel if you guys are new, and we're going to go ahead and jump straight into it. Now, this is the daily chart. Okay, we do have a bullish structure here currently that I will break down for you guys, kind of go over the key things that I'm watching on here and how I came up with this bullish structure. But before we do that, let's dive into it a little bit more. Now, the BOTZ ETF, okay, it invests in AI companies and their top holding is NVIDIA at 9.6%. All right, so that's a big chunk. NVIDIA is a big chunk of their ETF. So, keep that in mind. If you want to get good exposure to NVIDIA, but you can't afford necessarily investing over $200 per share into NVIDIA, this is a way to get some exposure to NVIDIA. Now, keep in mind, this video is not financial advice. I'm not telling you guys to buy this, but rather just trying to give you guys some information and update you on the stock. Okay. Now NVIDIA has run up massively since the beginning of the year. And things could be a little bit overvalued and due for a pullback, but keep this one on your radar as the trend is your friend. And as this uptrend continues in AI related stocks and in NVIDIA, we could see more potential upside. Demand for artificial intelligence devices is gaining, NVIDIA CEO said in a statement. AI has been catching fire thanks in part to the widespread attention to the ChatGPT chatbot and efforts from Google parent Alphabet Inc. and Microsoft to catch up. Jensen recently called ChatGPT the iPhone moment for AI. AI is at an inflection point, setting up for a broad adoption reaching into every industry from startups to major enterprises. We're seeing accelerated interest in the versatility and capabilities of generative AI. Now, this is that bullish structure that I was going over with you guys. Now, we tend to get 5-wave and 3-wave structures in the markets. So if you see here, when we had this bearish, downtrend over here, you can see we had a 1, 2, 3, 4, 5. And it's possible that we're trying to regain and reclaim some of that, downtrend with another 5-wave structure to the upside. We've already put in an ABC, right? And there is a possibility that this pullback here was our D wave, and we could be heading up to our E wave targets right around $27. Now, there's a lot of work to be done for that to happen, but some of the key things that I'm looking at personally is we have this nice trend line here that we bounced off once, we bounced off it twice, and we bounced off of it a third time again here recently. So if we continue to hold above this trend line, $25.10 is going to be a major resistance level. And above there, we could see a bull flag breakout and hit the $27 or the $28.39 area. As these two boxes right here, these are what's known as gaps on the daily chart. Now, gaps tend to fill about 90% of the time historically. The big question is, when are they going to fill? Sometimes they fill within days. Sometimes they take months or years to even fill. So what I like to do personally is just chart them up, set some alerts near those gaps, so that way I can know whenever something is trying to fill a potential gap up or a potential gap down. But not only do we have the possible 5-wave A, B, C, D, E bullish structure, we do also have a bull flag here that we're currently putting in. All right, so it's going to be really interesting to see, if we get this bull flag breakout, then that does give us a possibility to head up back towards that $28.39 region. Okay, but remember, $25.10 is really going to be our key overhead resistance of our previous high. We need to pay attention for a possible double top scenario where we put in a top here and another top here. If we're not able to take out this level and break out above it, flip it to support from resistance, then we put in the chance of possibly getting a double top, at which point we could see an M pattern form, right, off of the double top. And if we break through our bull flag structure and break this trend line here, there is the possibility we head lower. Now, the major support levels that I'm paying attention to are 23.18, 22.58, and 21.98. The reason being is because these are the three most common and well-respected retracement levels when it comes to using the Fibonacci retracements. All right, I actually just did a whole brand new tutorial on the fibs and how to use those. So if you want to, dive a little bit deeper into the fibs and understand how they work, just type in ZachlyTrades fibs on YouTube and it should pull right up. Now, so basically what that means is that anything above $21.98 is still within healthy retracement territory because nothing moves in a straight line down or in a straight line up. As you see over here, we move down, then we retrace, continue lower, then we retrace, continue lower. Here we move up, then we retrace, continue higher, and we've retraced, but we're still above our healthy retracement territory. Ultimately, if we break this trend line here and flip 21.98 from support to resistance, then most likely we're going to come back down and retest some of our previous lows at the $20 region, even potentially as low as the $17 region. Okay, now one last thing that I want to highlight here is going to be our MACD. If we pay attention to our MACD, you can use the MACD to spot potential entry and exit signals. And so an entry signal would be when this red line here crosses above the blue line. And you can see we actually just got a bullish crossover on the MACD. We got that right here at this point in time. And we've already went from $23 up to about almost $25 here recently. We've started to pull back just a little bit. But last time we got a MACD signal, we ran up about 20% from the MACD signal all the way up to $25.10. So if this thing can continue heading upwards in an upwards direction and creating some space between the red line and the blue line, that could be a signal that momentum is going to continue and that we may possibly get that bull flag breakout that we're looking for. Now, when it crosses down below, that's typically known as an exit signal. And you can see we got an exit signal here, and we fell down about $2 or $3 after that exit signal. So keep a close eye on it, because if this thing just consolidates and ends up curling back down, that could signify that we're going to break some of our trend lines or break some of our key major support levels. Now, I don't want to go over just the bullish structures. If we zoom out some more and we go to the monthly chart, this is a monthly chart. So each candlestick represents 1 month of time. You can see that we're trading in this bearish channel for a very long and extended period of time throughout the bear market, essentially since the beginning of 2022. We've been in this bearish channel for an entire year. Now, recently we got a breakout retest of that trend line, and we've continued to push up higher. And it seems like we are heading for the 38.2% retracement level. Now, remember, I said nothing moves in a straight line down or a straight line up. You typically get those moves down and then a retracement and then a continuation of the trend or a possible reversal. So we had an extremely large move down. We're starting to retrace now, and I wouldn't be surprised if we came up to the 38.2% retracement level. Remember, these are the three most common and well-respected. There are other retracement levels, such as the 23.6, which, we may have already come up to there, and that may be our major resistance level. We don't have to retrace all the way up to the 38.2, but it really wouldn't surprise me. Now, the thing that you need to be cautious of is that if we do get a retracement up to our 38.2 or our 50% retracement level at 28.63, that's going to put in a right shoulder right here, right? So we have a left shoulder over here. We've got a head. That would put in a right shoulder if we're not able to take out and break out above these levels here. It's going to put in a right shoulder, and we could see a possible head and shoulders pattern form that would take this thing all the way back down to some of its previous price levels around $16, maybe even potentially lower. So that's definitely something you want to be cautious of. Now, when it comes to this rally here and this breakout, we had a few things, giving some potential signals. We had bullish divergence, which if you're not familiar with that, take a look at how we have a low here, and then we created these higher lows here. So the RSI is in an uptrend at this point. Okay, and the RSI stands for your relative strength index. It's going to measure the relative strength of a stock at its given price. And what we can see is that the stock actually went lower throughout this period of time. So while the stock was in a downtrend, clearly making lower lows, the RSI was actually in an uptrend, making higher lows. This is a simple term known as bullish divergence and indicates you could see some type of bullish activity. Then we got a breakout of the channel, retest of the channel, and we pushed up higher. Now, I mentioned the MACD as possible entry and exit signals earlier. If we see here on our monthly chart, we had a nice curl down and it curled down below here on our monthly chart. And you see that really started this huge sell-off that we had. And look at the MACD right now. It's attempting to curl back up above this blue line here. So could that possibly be an entry signal and something to pay attention to? So that's some of the main things that I'm watching when it comes to bots on the monthly chart and the daily timeframes. Hopefully you enjoyed this video, and if you did, smash that like button and subscribe to the channel. And I'm out.